Is it your goal to increase your investment's value, to get dividend payments, or a mix of the two? Perhaps you're familiar with the name Amazon and are debating whether or not to purchase any of Amazon stocks. If that is the case, then join us today as we discuss should you still hold Amazon stock in your portfolio. Let us discuss our first reason to buy Amazon stock. With regard to its ownership in Rivian Automotive, Amazon reported a non-cash loss of $7.6 billion in the second quarter. Prior to Rivian's first public offering last year, Amazon paid only $1.35 billion for a 20% ownership in the company. As of the right moment, the market value of the EV manufacturer is approximately $30 billion. In other words, Amazon will most likely make a huge profit from this investment. Investors with a long horizon may expect Amazon to continue its leadership in both the lucrative cloud services market and e-commerce. These two factors are also reasons why you should consider investing in Amazon. However, we will go over them subsequently, so stay tuned for that. The massive $60 billion was part of the company's 2021 capital expenditures. Amazon stock is now available at a price that is lower than it has been since 2016. With a year-over-year increase of 37%, Amazon Web Services had revenues of $18.4 billion in the second quarter. Amazon Web Services reported a massive $6.5 billion in operating profits after deducting very minimal operational expenditures. Experts in Amazon's management team alike anticipate rapid expansion for Amazon Web Services. Secondly, Amazon has also established itself as the undisputed leader in the online retail sector.
I agree.
To purchase online, Amazon is among the best-known options. Amazon offers a variety of perks to its customers. For instance, Amazon Web Services customers from all over the world due to its low pricing and a wide variety of products. The business controls more than 45% of the U.S. e-commerce sector. As of late 2021, Amazon Prime could be accessed in 22 different countries. It is believed that Amazon ships out 1.6 million parcels per day. And this includes all of the weird stuff I order without having to worry about being judged. There was a total of $25.21 billion in income produced by Amazon in 2017 from only retail subscription fees. This improves the company's prospects, which is good news for Amazon stockholders in the long run. Also, if you are interested in learning more about investing in stocks, this is the correct channel for you, so subscribe immediately. Anyway, we will tell you why some investors are avoiding Amazon, so stay tuned for that information. In addition, Amazon was one of the first to use cloud computing. In the field of cloud computing, the firm was an early adopter. Some market observers predict that this industry will expand at a compound annual growth rate of over 16% between now and 2026. With its meteoric ascent, Amazon Web Services now dominates the cloud computing industry with its meteoric ascent. As of the end of 2021, Amazon Web Services controls approximately 30% of the $180 billion market. To many people's surprise, Amazon's cloud computing segment now has far greater profit margins than its conventional e-commerce division. In 2021, the company's net sales were $469.8 billion, with Amazon Web Services accounting for more than 13% of the total, or $62.2 billion. Of the total $24.9 billion in operating profits that Amazon generated that year, $18.5 billion came directly from Amazon Web Services. The benefits to firms from using cloud computing technologies like data analytics and data storage are substantial. This entails increased output, less costs, and more adaptability. As a consequence, Amazon's bottom line should improve as Amazon Web Services continues to contribute an ever-increasing share of the company's total income. Anyway, why some investors are shunning Amazon right now? Since the online retailer announced an abnormal quarterly net loss of $3.8 billion for the first quarter of 2022, its stock price has been under pressure. In the most recent quarter, the firm once again posted a net loss, this time of $2 billion. The first days of the COVID-19 outbreak saw Amazon spending extensively to meet customer demand. Over approximately a year and a half, the firm more than quadrupled the size of its fulfillment network. However, the increased demand didn't continue as long as anticipated, and supply chain restrictions have only made matters worse. Russia's invasion of Ukraine has caused a spike in gasoline prices, so it's no surprise the corporation is losing money.
Definitely.
So, is Amazon stock a buy? We are of the opinion that this is the case. Nonetheless, we would like to make it clear that the information presented here is not intended to be taken as investment advice. So take caution when making any financial commitments. Additionally, investing involves risks, so you shouldn't put money into something that you can't afford to lose. Thank you for watching and see you in our next video.